this is what we're seeing. You got all this data. It can sometimes feel like this. I don't know if anybody's ever felt like this, of anybody that's on this on the call today, but I mean, you've got all this data. It's all interconnected somehow, but it's really, really hard to make heads or tails of it, make sense of it, and see how it all aligns to where you're going. This is, if I'm trying to map out where I'm going to go from point A to point B, where do I start? I've got all this information. I got to know where I am to know where I'm going and how to get there. And it's really difficult because you have all this information. And what exacerbates it is a lot of this information is there, but it's in a format. If any of you have seen some type of spreadsheet or board report tell us a lot of data, but it's not necessarily linked to the strategic goals and risk appetite. It doesn't have anything that stands out. I have to go pore over this, make my own assumptions, and try to figure out, what does this mean? How do I now try to understand at the end of the day what exactly decisions are going to be affected, both ones we've already made and ones we need to make? So how do I take this information and pull it back together? So kind of as again, agnostic to anything else, these connections seem to be pretty tried and true on this optimized risk framework. How do I start to establish these connections? How do I set a consistent methodology within my organization? How do I make sure I'm looking at the right data to match performance and tolerance in a way that really tells me how well I'm doing? And how do I understand how this is related to peers, to external factors, so that I can understand across the board, what does all of this mean? How do we drive insight and make better decisions? The question we usually get is, okay, this sounds great. Looks fancy. It's a great image. I get how it works together, but what's feasible about this? How can I feasibly do this? How can risk and compliance technology really help me do this? Well, if you have a technology that has a singular risk and compliance database, being able to establish that baseline. A lot of you have this baseline. How are you managing your activities today in spreadsheets? You have a program in place. You're able to respond to events when they've occurred. You've got the basic check the box requirements. You have to have that in place. You have to have the people and the process in place. Where it starts to come together, though, is you start interconnecting your risk and compliance workflows to those policies and procedures, to the risk appetite statements, to all of your metrics. And when you start doing that for each one of those workflows and each one of those repositories of information that you connect together in one database, you start to be able to get a bigger picture, and you're start to be able to see trends of things before they go wrong. You're able to start to actively seek identifications of hazardous conditions because maybe you saw an uptick in complaints in one area that normally would have been siloed, but you realized that was connected to these other two areas of risk. Or maybe I saw, it wasn't a terrible exam grade, but I got a few pieces of insight where there was questions. And just having those questions or observations helped me correlate to a systemic issue that I never really had put together before. Those can start to help you proactively execute with your internal metrics. And now if I start to look at that and map that to all of my market conditions in peer analysis, I've basically put into place a dynamic SWOT analysis that is backed by data. If I look at compliance as the ability to understand how well we're executing to our policies and procedures, how well we do what we say we do. If I look at risk as how well we are hitting those guidelines to be able to hit the growth numbers that we want to hit, you have a good analysis internally looking of your strengths and weaknesses. If I can now look at that in regards to context of market conditions and peer analysis, I've got my opportunities and threats. And instead of an anecdotal approach to strategic planning, I've got business value creation. I've got the ability to look forward and provide our organization with more insight. So with that, I'm going to go ahead and show an example. Let's have some fun with this last 10 to 15 minutes here. I'm going to go ahead and pull over a live demo environment here, and I'm going to stretch it out just a little bit so we can see it here. This is a cloud-based tool. So you're seeing here the Predict360 environment. By default, I have my homepage set for my strategic objectives dashboards. If this is not rolling down from your top down, what is it helping with? Ken just said, great. You've got these spreadsheets or other areas. How can I actually understand what's going on? I have a system here set up with 4 strategic objectives. One of the ones was strategic objective 2 to grow the commercial loan portfolio. You can see other ones for growing the bank's assets, mortgage loan portfolio, ensuring bank operates in a safe and sound manner. Each one of these has its own unique identifier. It has subtasks that are related to project initiatives. I've got due dates. I've got assignees. In this case, I've got George, who is our CEO. I've got Nadia Lynn, who's our chief risk officer. So you have these different assignees that let me know these are all in progress right now, and I can see which ones are crossed through because they've been completed. If I look down below, here's all of my strategic project initiatives that are tied to those unique identifier for each of the strategic objectives. So for the example we gave, objective 2, which is MRB 18, I've got my 3 project initiatives: increase number of commercial lenders, increase both retain existing staff and hire 1 new ADC lender, as well as assign a portfolio manager from credit analysis to CRA lending. I've also got to hire 2 new SBA lenders in Atlanta and Birmingham. So I've got a few project initiatives, again, each with their own owner and due date, as well as a status of each one of these. So in this case, I am seeing real-time data. If Jason comes in here and says, yeah, I just completed this, we just hired our new ADC lender, and he says this is resolved or closed, you're going to immediately see an update and a cross through up here in my strategic objective. So it's not having to go manually create or update these spreadsheets. You're seeing it with everybody working in the same system. Now the trends are on the right-hand side. I want to see my initiative timeline and status. Each one of these have some dates associated with them. I want to see what those dates are and whether they're closed, open, in progress, or resolved. And again, you notice each one of these are live links. So if I want to see all the open ones, I simply click into here and I get a list of any of these open or yellow ones that I can start to look at and work with. I can also see any overdue project initiatives. I've got 2 here for reviewing other transaction fees and reviewing loan transaction fees. These are overdue. It's nice to know that they're overdue. I can see that they're both in this space for February and March timeframe. And last but not least, who are all my strategic project initiative owner and what the status are. So I've got one nice dashboard that lets me take that strategic objectives and take a look at it throughout the entire organization. Now, you may start with this as your homepage. You may decide I want to look at something like my corporate risk profile. I see all of my areas of risks. I have here a system set up with 6 different risks. I might have 7, 10. You can determine what they are. I can see my own risk and controls here, along with the current level of risk based on either control testing or issues that may be tied to areas of risk, and predictive risk scores that may be tied to metrics that I'm tracking. So this gives me 2 ways to look at my strategic objectives, either by risk category or even by the objective category. And of course, I can come here and see some of my bookmarks. So I can see Risk Insights that pulls individual metrics. I might pull open my risk appetite statement and click into that area so that I could pull up that report. I might pull up a KRI trend dashboard. And last but not least, a top risks dashboard. All of these are visualizations that start to pull out that type of information. So I'll walk through each one of these as you saw them pull up here, and they're live loading here into this environment. This one looks, again, similar to a risk and control assessment. I've got an inherent risk and a residual risk. I can break these down into individual subcategories and risk statements, but I can tie, I've eliminated a few of these just for ease of use today. I can tie KRIs, in this case, new privately owned housing unit starts, to a data value and a target value. And right now I see this is yellow. This is outside of my tolerance level. I can see here, I've got total ADC loans that is outside of a tolerance level. I want to understand when any of these are showing me outside of my tolerance level so that I can dig in a little bit further. That's telling me I need to focus in credit risk because I got a few that are outside of expectations. So let me look at that appetite statement. I'm going to look at my credit risk appetite statement and see it's pulling up here. I've got a credit risk appetite statement here. You can see it's tied to credit risk. I've got 5 or 6 metrics here that I'm trending on, and I can see which ones are the ones that are not working correctly. It's outside of a tolerance level. 30-year fixed rate mortgage average in the United States. Here's my description. I can scroll over and see any of these outside of my middle target. Right here, I see unemployment rate in Texas is actually right in line. It's 4.3, and that's in between my 2 limits of 4 and 5. So it doesn't show up on here, but anything that's outside of my expectation, I want to see that and see how bad it is. So now I can start clicking into these individual credit risk metrics. So now I'm looking at credit risk specifically. Here's those 5 metrics. I can see which ones are in the zone. I can see a trend analysis. And if I want to look at one specifically, such as 30-year fixed mortgage rate, I can click on that and see historical data. Am I just now getting out of my target, or have I been out of my target for some time? So I can now see some target lines in comparison to the trending data. And this is data that can be pulled directly from your Federal Reserve Economic Database. It can be pulled from other data sources through APIs and set up to automatically populate here within the system. Last but not least, as I'm doing my risk and control self-assessments, I want to be able to see where are my top risks. So I can see my highest level risks, my moderately high risks as they come out. And really, where are they? Are they an operational risk, strategic risk, compliance risk? And as I break these down, can I start to see the descriptions? Where are my controls at? How many controls do I have in place for each one of these? So giving me an idea of how I want to look at this, maybe by top business units. Maybe I want to look at it by categories such as products or processes. But now I'm starting to see a breakdown of all this information in a singular format with the ability to be able to click through and look at all of my favorite reports. How do I highlight what are my top areas of risks? How do I highlight my metrics that are not acting as I expect them to, that are outside of my tolerance levels that I've defined? How am I able to look at my risk appetite statement and see where I'm outside of what we wanted to do for credit risk specifically in this example? Now, the second question we always get is, hey, this is great. How do I get this information into a system like this? So I'm going to show two quick examples. You've already seen kind of the high level reporting of what the RCSA process looks like. So I'm not going to dig into that in too much detail. But coming back to here, what I will show is both the ability to standardize on risk and process taxonomies. For those of you who are here today that are ABA members, you have access to industry best practice content libraries. So this is a wizard or a guide that allows you to build a risk taxonomy for your risk categories based on either a 360 factors community content library, and this is for all the banks that are existing customers that have opted into providing their assessments that have been anonymized or genericized. We've got an ABA content library that we've built and co-developed based on the CERP training that the ABA offers. We've got premium content upgrades from different partners of ours. These all are very easy to grab risk categories or statements and pull it over. So if I wanted to look at something like compliance risk, or maybe I'm looking at credit risk, since that was our example. Now I want to look at commercial real estate lending. I could look at any of these subsections or take the entire thing and simply move it over into my library with the click of a button. And now I can connect those to my KRIs. Simply by performing my risk and control assessments, this data is aggregated. And I can choose how we aggregate it by business unit or by product and service. So I can look at it by different views at any point in time with live data that's updated in real time. Okay. The second piece here that I'll show is the KRI section. So the last piece that I'll end with, because I know we have about 4 minutes left, and why everybody came here today. I want to set some key risk indicator definitions so I can pull this data in and link this to risks and my risk appetites. That is one of the challenges, again, in a spreadsheet. I'm going to look here at a 30-year fixed rate mortgage average in the US, because we just looked at that one. If I come over here and I edit or modify this, you're going to see the setup here. It's relatively simple and straightforward. This is coming directly from the Federal Reserve Economic Database. You can see the Fred Series ID. If I want to add one of these, I simply come in here and choose whether I want this to be a manual KRI, an automatic through API integration, or Federal Reserve Economic Database. I could also pull these in from sources like the FFIEC call reports or other data sources. I've got this series ID. I have this one connected to a specific risk appetite. So it's a metric that I have tied to that risk appetite so to really pull it all together. Here's my metric and the name. I have a description here, what this is. You can see I can tie it to my risk taxonomy. So I have it as part of my credit risk category. Down below, you see it here. I can tie it either to a category or directly to a KRI or strategic objective. So you have different ways that you can map this metric throughout the organization so that as it gets updated, it updates in all of those different reports and views that we just saw. Is this tied to corporate or a business unit? Is this going to be a number, percentage, monetary? all standard stuff for setting it up. But the important part down below, do I have related peer metrics? Ken showed a really, really great idea of being able to connect to a few peer banks and your baseline to understand what that is. I can define all of those here. I can set my measurement period, whether it's monthly, weekly, daily, annually. And then I set my target value and then any of my triggers on both sides of the metrics. So something like liquidity or capital. If instead of having to have 2 KRIs of excess liquidity and insufficient liquidity or insufficient capital, what if I just had 1 KRI and I've got targets on both sides? So it gives you some capability to not only define the trigger levels, but also what's positive and what's negative. So there might be some areas where maybe it's less complaints than we've historically had. It's actually operating better than we expected. We've historically had 10 complaints. It may be operating a little bit better than what we wanted to. So this allows you now to pull in live data from your Federal Reserve economic desk, from your FFIEC call reports directly into your system and tie it to risks, tie it to risk categories, risk appetite statements, and really connect with that optimal risk view across the organization.